All right, let's get started with it. So it is Tuesday, October 14th, 2025. Income Navigator live trading on the session. And like I mentioned a few seconds ago, markets are up, they're down, they're all around today. Uh, Still think that Friday may have been the low, at least the recent low. We'll see if that continues to be the case. We had a pretty good VIX spike on uh, on Friday, and a lot of times, that was like a 32% VIX move. Now, was dead, still is dead, but VIX was pretty low at the time. So a 32% move wasn't like crazy, but it's percentage-wise, it's big. But when you're down at 14 or 16 or something, it doesn't take much to make a big percentage move. However, that big of a percentage move does often indicate, and if you go back and look at some VIX percentage spikes, there oftentimes those come at local lows or recent lows. Don't know if that's the case, but right now Friday's low is still the low. We had a pretty good bounce yesterday. I don't know if it was a dead cat bounce or not. It seemed pretty broad-based, so not too shabby all the way around yesterday, but we did retrace about 50% or so of the move from from Friday, which was a good opportunity, in my opinion, to sell zero DTE at that 50% move. And then we kind of gave back and then regained a little bit through the end of today. And then today we gave back a little bit more of that. So we gave back more. And yesterday was an inside day. So what's an inside day going to do from a candlestick pattern standpoint? Not much. Doesn't mean a whole lot of anything. So an inside day doesn't do a whole lot. So I'm not sharing charts, but I will now. So let's get into it and see what we're looking at. I'll get off video for you, but I wanted to set this up a little bit. But you've got an inside candle day. What does that mean? Absolutely nothing. Pretty dominant candle Friday. Inside day does nothing, does not change the tone of anything that's happening out there. You can go back and look at uh, inside days. Do they, they could potentially indicate a change in direction, but they have to be followed through on. And today, so far, we're not getting that. I'm looking to see if there's not too many inside days that happen in the market. So it doesn't happen an awful lot, and I really have trouble even finding one. Not recently here, but could be a change in tone. But you've got to get follow through to ensure that that's the case. And I'm not sure we're going to get any follow through. I think right now we're just setting up for some sideways consolidation on that as a whole. Okay. And I think as we go to trade, when you look again, and I spent time on this yesterday, that look at this weekly chart. The 8 is above the 21, and it's actually increasing above the 21 recently, as much as this week, even. So, despite a big down day Monday, a little bit of a move back Tuesday, and a pretty much of a flat nothing day today, uh, we're really bullish on the weekly chart, which means there's no reason uh, to panic, get bearish, start throwing hedges left and right. I'm not. Uh, Now, is there a reason to be cautious? Well, sure. If you look at the weekly chart, we got for the last 2 weeks, we entered a bearish PSAR. Okay. MACD is rolling over a bit. We've been overbought, but we're still hanging above the 8 EMA and we're nowhere near the 21. So uh, I'm not going to panic myself into doing anything crazy here. You cannot see my screen? Anybody? Should be able to. Okay. All right. So as long as one of you see it, okay. So if you don't see it, then you've got a setting amiss somewhere. But anyway, bullish on the weekly charts. Nothing's really changed a whole lot since yesterday. I think we're really setting up for a pretty nice little 112 opportunity, and I think we're really set up for a really good strangle opportunity in ES. In fact, I think today is even a better day than yesterday for a strangle. So I don't know that I have the buying power to do so. I'm right there, but I don't know if I want to burn the buying power on an ES strangle. But to me, an ES strangle or even a 112 trade is not bad in here. Now, we did put on the BA 112 trade already. That thing's up 50% in the last 20 days. Uh, it's in good shape. In fact, we actually touched today briefly. We touched the top of the trap on that, and then we bounced off significantly. I still think we may, see some more selling into the close. We'll see, but we bounced nicely on the session today. I do like a 112 trade here. I just wouldn't be aggressively doing anything here. I think we still, and you can see us dropping a bit. Yesterday when I talked, we went up. Today, I think we may sell off. I don't know. We're down about 28 points or so right now. We'll see how it goes when I talk today. But I don't think we're going to see a big green day at all today. So if I was a betting person, I think we either hang tight where we are or potentially uh, head lower and break yesterday's open. But it was a nice gap up yesterday. Good move on the day. 112 strangles are the order of the day. We'll look at modeling some of those in ES. Uh, Oil continues to sell off. Downtrends in play. Nothing here for me. I'm not trading anything in oil until we start to see some sort of bottom in here. I do have oil trades on. A couple of them are down a bit. Jade Lizard's down a couple hundred points. Strangles down a couple hundred points. And then I have an old 112 that's up 33% right now. And we're just fractionally entering the trap on that CL 112, which is perfect. So if we can hang in here and find some bottoming, we're getting to a pretty decent oversold level. Doesn't mean we can't keep going further, but for me, there is no trade. Like I said yesterday, there's just no trade on oil at all. So we're definite hold on oil. Hey, here's a shocker. Gold is up. We certainly uh, have embraced that, love that. I think gold being up is great. And we have a BA 111 in gold, and that thing's up 34% in 5 days. So we're scooting along on that BA trade. We've got a little bit of ways to go, but 33% on a 60 DTE trade in 5 days, not too shabby. And I think it really sets up well. Would I do anything here? No, it's a hold for me. So I'm not adding any more gold trades either. So oil, gold, total holds for me. Bonds, though, look good. I mean, if the market's going to keep, giving you some selling, the bonds are going to keep moving higher. And if we look again at the U.S. dollar, which the only time we do this is when we talk bonds, the dollar's had a bit of a nice rally going here, but it's still pretty terrible. But a little bit of a rally on the U.S. dollar, which is going to move rates lower. Okay, and rates have been dropping. So here's the 10-year all the way down to 405 right now. Recent lows. So we're sitting at new lows on the 10-year. And if we look at the 30-year, okay, we're sitting at 464. So we're sitting at some lows here as well, at least recent lows, not all-time lows, but new recent lows. Do we find some support here for bonds, or do yields continue to fall? We got a Fed meeting coming up. I think the expectation is that the Fed will cut rates. It really doesn't affect the long end of the curve so much, but the long end of the curve is definitely facing pressure, which is pushing bonds up, which again, TLT, ZB, however you want to play it, this is bullish. We're in the lazy trader account. I have a TLT, poor man's covered call. That thing is fantastic. In fact, what is it at now on this TLT? Poor man's covered call. This thing, as of yesterday, in fact, let's update it for today. It's up 255% in 34 days. Okay. 255.8% in 34 days. So if you followed me into the TLT, poor man's covered call, I mean, on this move higher, we're absolutely just smoking it on here, and we're selling, decently far out of the money, and that's even getting pushed a bit today. So loving that trade. Um, I wish it was bigger. Uh, right. So there's a good trade. So if you're in that TLT trade, you are rocking it. Is it time to sell the short calls on that TLT trade? Well, we can look at it when we get into it. Right now, no, there's a lot of extrinsic left. We got 3 days left. I mean, I sold the 90s and we're at 90.50 today on TLT. So no, I wouldn't roll today. Too much extrinsic value left in those. Even on the poor man covered call, still want the extrinsic value. There's no reason uh, here today, especially on this, big pop higher, and we're at the top of the Bollinger Band. I think this is a good time to just kind of sit on those things. I don't think I would touch those myself. Okay? No need to roll. Lots of extrinsic. There's over $800 of extrinsic left in that thing. Let's do that. Extrinsic's not necessarily in play with the poor man's covered call, but I mean, why roll with just that much extrinsic in it? If we go in the money, I'm okay rolling up anyway. It's not the touch necessarily that matters for me on that. Not yet. And it's just barely a touch, and we're overextended top of the Bollinger Band. Uh, I think I'll just going to relax on that one for now. All right. And if you do look at the management on the leaps here, and I would close it again. And this is the not the income poor man covered call, but the standard uh, poor man covered call. You don't have to get too carried away on it yet. I think we just let it drift a bit here. I'm not going to do anything. All right, so that's enough on that. But I can roll it up and out if breached, yes, but I'm going to wait a little bit on the extrinsic for it here. All right. So let's keep moving on. So there's bonds, and then the Nasdaq though doesn't look quite as bad. Uh, we touched off the 50, had a bounce. Today looks halfway decent. It looks a bit better, than ES, and now ES is only down 13 points. So again, I can only do these zooms for you guys so many times and rally the markets for you. That's got to be worth the price of this service alone, is that if I do a zoom and I rally the market every time I do a zoom, uh, that you've got to be able to trade that. Zoom 0 DTE. All right. But NASDAQ not looking too shabby in here. I'm not trading it, but the NASDAQ gives you ridiculously far out of the money naked puts and some really big traps. It's not a bad thing to trade either. Uh, so I don't trade it because I already have a lot of trades on and I'm pretty stuck with the core four that I have. Nasdaq's not a bad spot. We'll do one on there today, and then RTY. It had a big dip down, but this thing looks really good. So we're up. Now we've erased everything from Friday completely. So Friday is not even a memory anymore. This thing's heading back. So if you're in the Russell looks really, really good as a pop, and then we're heading back to resistance. So I think small caps do look solid here. And we don't really touch on the metals too much. since they've just been on a parabolic move up. I don't trade them. There's silver, now copper, kind of sideways action in here. It's not a bad play. It's just not something for me. And then with the dollar rising, obviously the Aussie dollar is going to keep falling. Might be an opportunity to make a play in here, but they're not setting up for a strangle. I think copper is a potential strangle, but that's it. I don't typically do income forming covered calls on the Russell. You can. I don't love the Russell as an index, and I find it extraordinarily difficult to get in and out of IWM or RTY. It's just not as liquid for me. We can take a look at it. I mean, it's definitely a uptrending. It doesn't fit the typical criteria for me of, the higher earnings. And here's the problem with me trading the Russell, is there's this the Russell 2000, right? But there's actually only like 20 profitable companies out of 2000 there, and almost none of them fit my criteria for growth. So I don't love it. I think with interest rates dropping, the Russell's going to be benefiting. But if you look at the move, I mean, it's the same kind of move that we had in the S&P. I don't know. Is that already built in? Some of these built in. Plus, I think most of the companies in the Russell just stink. It's just a terrible index of crappy companies with like 20 good companies in there. So it's hard for me to trade it. It might set up uh, for you. Glenn, IWM, PMCC. Okay, well, if anything that's a PMCC this year is a good trade. I don't care if it's the Russell, the S&P, the Qs. Okay, when the market only goes up since April, it's got to be a fantastic trade. Okay, it's basically the same exact chart um, here, but the Russell hasn't pulled back as much, which I think looks interesting for you here. But yeah, sure, as a poor man's covered call, I don't think it's bad. Uh, but everything's gone up this year. I just don't love the Russell as much as I like, the Qs or what have you. All right, doesn't mean it's bad. Okay, it's just not for me necessarily. Amazon trying to find its footing in here. We've now got the 200 starting to, tilt down. We did break the 200 briefly today and got really close to this anchored VWAP. I hate to buy something where the 8 is distancing itself from the 21, is distancing itself from the 50. It looks like a pretty bearish momentum going on Amazon here, but so it's hard to recommend it, but man, this is when you're at the 200-day moving average. Let me pull up another chart and let's look at this one. It's a little easier, a little cleaner um, to look at. So if we look at Amazon here, and let's go out a ways. I mean, when Amazon gets down, obviously this was a funky time of the year, but when Amazon gets down to that 200, it rarely ever touches it. Okay. Let's go back here. I mean, you've only had outside of this year's, you know, big tantrum piece here in March and April, and it was affected by the tariffs. I mean, you've had it one time back here in 23. You've had it another time where it broke it briefly for a couple days in August of 24 with the tariff tantrum thing here. We broke it for a while and then we got back. Uh, when you hit the 200-day moving average on Amazon, it's usually a pretty good opportunity. This is another one back here. Now we got close. We didn't touch it, but we got very close and then had a nice rally from here from 214 all the way up to about 240. You're doing it again. Okay. Things look bearish. Things don't look great on Amazon. Could we break it and get down further? Possibly. But it's told us that if you want to buy and hold Amazon and you still believe in the company, that uh, I think Amazon's a good opportunity here. And income compartment covered call on Amazon. Yeah, anything on Amazon to me leaps. Uh, Income compartment covered call. Any of those things here are a real possibility uh, for that. So, yeah, I mean, so here's a question from Nicholas. I'm trading Amazon as a poor man's covered call, but I wonder if it shouldn't be an income poor man covered call. Well, I think what you can do here is don't be stuck on your delta when you're trading a poor man's covered call. Okay? So again, the rule for me is 15 to 20 delta when we're above the 21, and then it's 25 to 30 delta when you're below the 21 day EMA. So I think this is an opportunity here that I would definitely not be selling anything on poor man's covered call. I would definitely not be selling anything further out than a 30 delta, and I'd probably even consider right now maybe even a 35 to 40 delta. Okay, just watch for the move higher. But right now, and as long as you're below this 21, I think you can go more at the money. And then once we get above it, then again, stretch leg that thing back out and get back to the 15 to 20 deltas. So I think I think don't be stuck with just 30 delta, 30. That's what everybody teaches. Oh, 30 delta, 30 delta. It's not what I'm doing here. I'm doing either 20 to 30 delta if I'm below, and I'm 15 to 20 delta when I'm above the 21. We're below. So 30 delta is an absolute most I'm going, and I could consider a 35 delta, something like that. All right. Do I sell weekly covered calls on IPMCC? I do. I do. This week I'm going out 2 weeks because I've got a wedding this weekend, and I'm going to be taking off most of Thursday and Friday to get ready for my son's wedding. But so I'm stretching things out so I don't have to trade much on Friday. But normally, because I'm online, I don't mind going 1 week. If you were on a poor man's covered call, I think you can absolutely do 30 DTE on it. Even on the income poor man covered call, you could also do 30 DTE. I don't think it's going to matter. The only difference to me is 30 DTE is going to give you about half the return of weekly. Okay, so weekly I might get 1% weekly, monthly I might get 2%. Okay, so if it doesn't matter because you're working and you have other things going, then I think there's no reason to trade weekly for poor man's covered calls and so forth. Okay. But I like the shorter 2 to 3 days. It's too short for me. This is already enough. Okay, I have a lot of accounts. I have a lot of trades. I couldn't do 2 to 3 days. If you want to, you can, but you're going to get whipsawed a lot. Even weekly, you get whipsawed a bit. It's almost too much for me. Okay, it's not worth you know, the juice is not worth the squeeze, in my opinion, to go shorter than a week. So, and Glenn, thank you. All right. I got to make some money. Got to pay for this thing. And I've got my daughter getting married in a couple months as well. So I got 2 kids within 5 months. So I got to make some money. So we'll keep putting on good trades, hopefully. All right. So there's Amazon. I don't think this is a bad spot. I really, really consider it, and I don't think a naked put is a bad play here either. On it, I'd love to see us try to hold something. So again, you don't have to be first. It's not a bad day if tomorrow we get an update from this. It's a nice reversal off of this hammer candle. Um, so I think that would be better. So I want to see a little bit more confirmation in this thing. Give me something here. Uh, Squeeze has reversed, MACD kind of reversed and then back down. RSI's heading lower. I think I think you can just be patient. Patience is great. All right, NVIDIA, we'll stick to this on this chart as well for a bit instead of the weekly daily chart. All right. So this thing looks pretty good as well. It's had a nice pullback on Nvidia. If you like this company, this is you're getting some potential opportunities in here on these moves lower. We're off of our lows. It doesn't mean get long, but we triggered a bearish PSAR today. MACD is falling. Volume is drying up on this move down, which is a good thing as well. And we broke the 50. I think there's no reason to jump in early. I think just be patient on Nvidia and let's see what it gives us. Tesla, same type of a thing here. Now, Tesla, had maybe a reversal a little bit yesterday, trying to bounce off the 21, and then today, kind of this doji candle. It's still bearish PSAR. Okay, RSI is falling. It's below its 8, but it's holding the 21. I think Tesla is just a good sideways trade here. I don't think it's giving you great entry prices. I'd chill. Okay, for me. All right, if we take a look at Meta, I have liked Meta. I like Meta in this range. Um, MACD is really starting to reverse and move higher. RSI is moving higher off of these lows that we just established. So this is a little different than what we just saw in NVIDIA and Tesla. This one's actually starting to make some improvements and really sideways. We have a bullish PSAR here. Okay, so as long as we can hold on to this 700-ish level here, bullish PSAR, even though the 8's below the 21, you're close to it. Let's see. You don't have to be first on this one, but I think Meta and Amazon are the two best trading opportunities that we have. They're also the closest to their. Um, they're also the closest to the 200 day, but this is a really flat 200 day on Amazon, and Meta's is flattening, but still bullish. I don't think this is a bad entry here. I think you got to be cautious. And maybe if you were jumping in, I would probably scale in. Why go with a full 500 shares or whatever you might do? Go with half. Okay. And if we sink down, add the other half. Okay. If you like it here, you'll probably like it a little bit more. Don't forget, we got earnings coming up. Okay. So we got earnings coming up on the 29th and 30th for most of these companies. So we are heading to earnings, which I expect earnings to be good. So I think that's actually going to move the markets. By the way, we're only down $9 now. So if I can get us to green by 12:30, I will have done my job. All right. Apple looks decent, but again, RSI is falling, bearish PSAR below the 21, MACD falling. Don't love it here. I'm not doing anything with Apple. Google, I like this one. So here's a good example on Google. I think this has been the best performing of them all. MACD last 2 days is reversing. Squeeze is reversing. Okay. The volume hasn't been great. It wasn't great yesterday. It was pretty weak volume. Today we'll see, but this is a pretty good move today. You're back 8's above the 21. You're back above the 21 off of the bottom of the Bollinger Band here. So now we got a rising RSI. We got an 8 above the 21. We're above our own 21. And uh, so three of the four things, the only thing that's bearish is the PSAR. So this one looks good. And this is what you're looking for is a reversal high and then some continuation. You didn't have to get in at the lows. If you did at the Bollinger Band, fine. I think now is not a bad spot. And we talked about this, I believe we talked about this yesterday, that this is a bit of a bull flag. You get a big move up. This is a bull flag. If we break this bull flag here, or this trend line here, I think Google goes. So I like Google in here for a shorter term potential trade. All right. Let's see. Let's keep going. There's some stuff in chat. We'll get to those. Microsoft, it's not a bad spot here, but everything is negative. Okay. You're below the 21. The 8's not below the 21, but it's heading there quickly. Bearish PSAR, MACD is accelerating to the downside. RSI is falling. Don't like it. Right? Palantir is trying to desperately hold on in here, and same type of a thing, but you get RSI is above the 50. It's trying to keep above the 50. We did trigger a bearish PSAR today on the big wick down to the bottom of the Bollinger Band, but it's hanging in there. I don't think you have to rush into Palantir today, but it's not bad. You do have earnings coming up. Earnings here are on November 3rd. I believe it's after the bell they announced yesterday. So I don't know what TradingView just said, but this will be after the bell coming up. It's not bad. If you like Palantir, it's not the worst place to be. We are in it right now for um, a 112 trade, actually, which is up 5% in 5 days. So I really like where we are on this 112 trade. The maximum for us on this is like $1,000 or so on this Palantir trade. So I like it. Let's take a quick look at this. You can see it. So this is a nice trade for us on Palantir. We're only up fractionally. Okay, but I like to sometimes draw these out, so bear with me. But if here's the 112, so the trade on Palantir, okay, on this is anything above the 170. So anything above 170 or below 170 is the trap. Okay, anything above 170 is the tail on this thing. Okay. So here's what the 112 looks like. I mean, it can obviously go up to infinity there. This is your 112 trade. As long as we stay above 151, like right in this area here. Okay. There's the 112 trade that we have on in visual representation format. All right. Anything higher? Okay, we make $1,000. If we land in this trap close to expiration, we're going to make $3,300. Then if we drop too fast, too far below this, we have problems. But I think you've got some decent support down here, which is why we sold it there. So there's some potential support there. It looks decent. I like it. I don't think it's a bad 112 trade in here. So again, we don't do a lot of them on stocks, but this is one. And it took a pretty good drop here, and it's held up well, and we're positive on that trade. All right. I know I'm spending a bunch of time here. Hood also trying to hang on to the 21. We are above the 50, but dropping on RSI. We have a bearish PSAR. We are above the 21, though, and the 8's still above the 21. So it's a pretty neutral trade in here. So what would you do with the neutral trade? Well, yesterday we put a strangle on. And so we put the strangle on in Hood yesterday, and here's what we did with that. We did the 180, 113. Give you a little visual representation. 180, 113. Okay. So here's the strangle that we have on Hood right now. So as long as we stay in this range somewhere, we'll be in decent shape. If we get a little bit of a run, perfect. If we stay right here and keep holding on the 21, I think that'll be fine as well. So there's the strangle on Hood. So again, right now, I still think it's very neutral trade. I'm not bullish here. I'm not bearish. It could definitely pull back some more. If it does, I would consider here, and this was a previous low here, which is actually where our strangle sits. Yeah, don't want that. So I think if we come down here to this 112, 113 level, I'd consider assignment and I'd consider wheeling this thing. We did a very small trade, but hey, we took in almost 850 bucks. So if we make 400 bucks on this thing and we only did this for 24 days. So I'm hoping in the next week this will come off. All right, Netflix, uh, lots of stuff going on in this chart. Netflix really sideways trading. We were doing this as an income poor man covered call. We generated a pretty good return, but it was chewing up a lot of buying power. So I got out of it yesterday for a 24% return in just over a month and freed up a ton of cash so I could go at some other things in there. And then AVGO, which I really do like Broadcom. Okay. This thing has a bullish PSAR. The 8's above the 21. It's above the 21. RSI is above 50. Okay. So this meets all of the criteria for me to be bullish. I think AVGO here is not bad. And yesterday I didn't like it because I thought it ran too much. But today I'm liking it a little bit more again. And you can, I don't know if we'll fill this gap. Oops, let's just use this one. There's a gap here to be filled. Okay, so we have this gap to fill. That's something to at least keep an eye on. I don't know. It's kind of a hard one to choose here. It's a very it's still bullish. I think a 112 here is not the worst trade. We did one already. We took that off. I'd probably consider doing another one here on AVGO. All right. SoFi looks good. Nothing to do on SoFi. If you want in, this may not be a bad time to get in. It's back above the 21. It's above the 21. It's bullish. You had a nice pullback move down to the 50 here. I think this could be an opportunity. I think SoFi is another good one. In here, we're in Uber with a Leaps trade. It's just hanging out at the bottom of the Bollinger Band here. I'm fine with it, with where we are. We didn't get the big move over resistance here that I would like to have seen before. And had Trump not tweeted, we might have been on our way. And then it got knocked down. I think it's another opportunity. It's it's bearish, so I just hold and wait to see, can we get back above the 50? Can this thing reverse higher? All right, ARM gone. I love this company. Can't trade it here. It's too far gone. AMD gone. Don't love the company, but they're doing very well. So if you're in it, congrats. I can't stand their CEO. All right. Now everybody and nobody likes that fact that I don't like her, but it's okay. She's doing well now, creating some good partnerships. So she's apparently figured out how to actually manage after completely destroying this stock for years. All right. Anyway, you don't need commentary, so I'll move on from that. Nothing to do here. I do like EME uh, and I do like NEE. Both of these, but they're a little too far extended. Okay, we are in this core weave. We put this thing on yesterday as well in core weave, and we did a strangle on it. I think it's an even better strangle today on core weave. So we're in this one. I'll draw it out for you guys. We did the 105, 190. I can't even see it on here. Okay, stop. All right, 105. Okay, and then the 190. Okay, so it's obviously skewed pretty heavy to the upside, but there's our strangle. I thought it looked good yesterday. I think it looks better today for a strangle. If I had a do-over, I think today's a better day. But this thing's still pretty positive up in here. And I like the cup and handle move. So I think this is what we've got to be looking at is this cup and then this handle piece here and a break to the upside. I don't mind it here at all. It is a little bit bearish um, from the fact that the RSI is dropping, but RSI is still above 50. It's a bullish PSR. Eight's above the 21, and stock's above the 21. So it checks all the boxes on that. But I just wanted to sell a naked put, and I thought, you know what, I can get a lot of credit by being way up here. So that's why I added that piece to it. All right, hopefully this is good with you guys that I'm just running through all of these. Um, Shop, uh, no go. It's all everything's not great here, except for the fact that the eight's above the 21, but the other three indicators are bearish. So nothing good there. App Lovin, it's not bad. I've been wanting an opportunity to get into this stock on App Lovin. So I don't like the fact that the 8 just crossed below the 21. So we just triggered that bearish move yesterday. So I think you just wait and hold on here, but I'm not going to hold long. If I see some confirmation in a move higher, and you got RSI potentially moving up, MACD trying to move up, you're in a down, it's triggered a squeeze to the downside. I think you just hold, but not for long. Hims, I don't know, maybe an opportunity. Triggered a bearish PSR today. It's going to be a while before that comes off. Nothing good on Hims. I'm staying out of Hims. Granny shots. If you like Tom Lee and what he does, this might be an opportunity here. It had a pretty good move. It had a good move lower today. Did trigger a bearish PSR. However, eight's above the 21. You're above the 21. RSI is above 50. It's not a bad spot to pick it up. Bull, I think we just wait. I think this is going to be an opportunity in here. We are getting very oversold. This thing's really been beaten up pretty good. Just don't be first. I mean, if you're in this thing, I don't know, you shouldn't be really. I was in it, I got out because it triggered my stops and I wasn't going to hold on to it. But until it shows you that it can actually go up for more than a day or two. Yesterday was a good reversal candle. We got no follow through today, so nothing's good on that one. Oscar, love this thing. I think this is a new another trade to get into here. And ACA is coming out with some news. Okay, so just bear with it in here. But when that ACA news comes out, I think that could really move this stock. Okay. All right. So keep an eye on it, but certainly a nice uptrending stock. This is perfect. Um, Uptrending stock. Great pullback. Gave us a great entry here. Everything is good to go except for the fact that you've got a little bit of a bearish PSR. I like it. I think Oscar's where I want to put on my next trade today, and especially since it did run and then pulled back a bit. I like it here. And then UNH, I think this is again another really good stock running nicely here. Uh, I will I will be a UNH proponent for a while here. I like it here. I think this is setting up for another good run. You're in a squeeze. Okay. So you got a squeeze setting up, squeeze fired, but it's going to head back into another squeeze. You've got a MACD, okay, which is negative, but RSI is strong. Bullish PSR didn't trigger the bearish. It's all stacked. Okay, so this meets all of my criteria as well. So I like UNH here. So Oscar and UNH, I'm going to keep beating the drum on these two stocks for a while. Okay, I think that's enough. Bitcoin's down today, which means IBIT is down a bit today. It's all good. Strategy's down just a bit, maybe a double bottom coming in here. So I think this is a really interesting spot. Can it hold or does it continue to tank? I would not chase it, but let's see what happens to it. And then Bitmine, which I'm a big fan of as well. I like this ascending triangle. You're at the bottom of this triangle. I think you got to, Bitcoin's struggling right now, and I think Ethereum is hanging in there a little bit better, but not today. I think this thing will go higher, but I would not jump in quite yet. All right, that's it for this. Let's put on a few trades in the account. So give me a second here. All right, let's share the account and we'll jump in here. We don't need to review positions. We did that yesterday. Let's just put on some of these trade ideas that we talked about. And I'm going to look at the chat uh, here as well, just to make sure there's nothing I missed. Oh, Charles, did you want me to review Deanna? Man, that is a blast from the past, I'll tell you that. It's been 20 years since I traded Sienna. Um, yeah, it's at highs. I wouldn't be touching it here. It's way overdone. I don't know if you're, but I mean, if you're in it, I'd stay in it. It looks strong and it's moving to the upside. For me, there's no entry point yet. It would need to have a decent pullback. Um, and then, all right, yeah, WPAY. So WPAY um, is another, kind of a covered call. It's not a covered call ETF. It's a little different. Okay. It is brand new, but it's not really a covered call ETF. They don't sell calls. Okay. It actually takes all of the round hill ETFs, the covered call ETFs. It takes all of those, merges them all into one. It owns pieces of each, and then it trades swaps. Okay. So this thing is a little different animal than uh, than anything else out there. It's a uh, really interesting company, but it's an ETF that pays a weekly distribution, kind of like any of the other covered call ETFs, but it doesn't sell covered calls. It sells swaps, and it's basically distributing every week, but most of it is return of all of it, I believe, is return of capital. Right? And its distribution rate is stupidly big right now. It's dist it's got about an 82% distribution. So it's been fluctuating between like that 70 and 80% um, on it, but it swaps on its own ETFs. It's really funky. I can't explain it perfectly to you, um, but it's not like swaps like you're thinking of, you know, the bond crisis or something like that. That's not what it's doing. But it's the way it's trading it is pretty interesting. I decided to dabble. I added it a little bit today because I had freed up so doggone much cash that I want to see how this thing traps or tracks. And the jury's out. We don't know how this thing's gonna handle. But I am watching it. I am in it because to me, the best way to test something is to actually get in it, not big. Um, did we just go positive? We did. You guys are welcome. If you traded a zero DTE put spread when I started, you're probably out at 50%. Okay. And this might be the follow-through day after yesterday. All right, so really good stuff. But yeah, this thing's only been around for a bit, and it got it got knocked down hard by Trump. Okay, and again, this is and so WPay got smoked down hard, but that thing's very interesting and a big distribution. It's all return of capital, so they're giving you your money back. Okay, so you're in it, and they're going to give you your money back, but its only holdings are all of the weekly paying ETFs from Roundhill, which is a really good quality piece. Now, I don't trade any of those because I don't love them all, but it's a quality company there. But it's a very black box. You don't really know what they're doing in here, but the distributions have been pretty good on it. And, it's It's certainly interesting, and I just thought with the way that the market got beat up the last couple of days, and that WPAY got beat up, I thought today, why not get into that thing, right? So, all right, we're in. So, lots of good looking stuff here. Even oil has come well off of its lows on the day. So we just continue to inch back as the market uh, panics, and then after a couple of days, the market doesn't give a crap about Trump or tariffs or anything else. Okay, so it's getting immune, and it just moves higher. I'm not saying we're going to finish positive today, but certainly well off of our lows, and our trades are looking nice. CoreWeave not looking as great, but this is a strangle. Strangle's actually up 13% now in a day. Okay, even though the stock is down a bit today, but not a huge amount, $5, big deal. But we are adding to it. So we got in the strangle yesterday, loving that. Our GLD income poor man covered call, plenty of extrinsic here, nothing to do on that. Hood, we added this strangle. This thing's up now 6% since yesterday. All right, so not too shabby. So a 6% return in a day on Hood. IBIT, with Bitcoin getting beat up a bit, these things are beat up a tad. However, uh, we are still not in the money on this one. So 930, we have lots of extrinsic, nothing to do. Our strategy trade, just barely in the money on it, but I'm fine with that. We sold a lot of money on this thing. So uh, we're already up 31%. We sold in the money, and even though strategy's down, it's up just a hair over that. Well, we're in good shape. I like it. That's trade's doing well. All right, Palantir, we are in that 112. This is up 13% in 5 days now. Palantir doing really well on our 112. We did a PayPal uh, trade yesterday where we just sold the naked put, and that's fine. I mean, we're down 3 cents today on the trade. We're only down $39, so it's fine. And nothing to do on Qs, nothing to do on SPY. So, what trades do we want to mirror here or put on? Let's put on a few trades, and Oscar is one of them. So if I wanted to trade Oscar here, I mean, I just think naked puts are good. You have earnings coming up on the 6th. Okay. So I'd probably go, if I'm going to sell naked puts, 30 days is kind of what I would like. I could do this one here, and we could sell a naked put somewhere down around the 16 level on Oscar. And that would be fantastic. So that would be the 100-day moving average. Would be the bottom of the Bollinger Band. This would not be a bad trade idea. So it's a portfolio margin account, but this would be the trade in Oscar right here. You're going to get $55 on 214. Okay, for at least for me, that's a 25% return. That's pretty spiffy. I will post this thing in the chat here. So this is Oscar Naked Put. Okay, and so this is one trade idea. Let's look at a 112 on this thing as well. I don't even know why I would do that, but let's take a look. All right, so if you want to turn this thing into a 112, I like to go a little shorter time frame on it. So I would probably do the 17-day. I don't know if this will set up. It might, because they got half strikes. We're going to do that same 16 here, and let's see what this looks like. All right, so here we're going to take in $35 on 373. So that's almost 10%. Okay, it's 9.4% return on this. And we still liked the 16, right? So if I was trading this, I'd probably size it up for my account a little bit more. I could go, I mean, this is still a 2x loss on this would be $1,000, which would not even be a 0.5% loss in my account, at a 2x loss if we drop down. So I like Oscar here. Let's do this trade. Um, it's fine. It's a small trade, 500 and some bucks. Nobody's getting rich on that, but let's put this on. So this would be a 1-1-2 trade. So it does set up decently. And it's nice to have buying power available in this market. So this is the OSCR 112. Okay, another trade possibility. Okay. So I like both of those options on Oscar in here. We'll see if we get filled. If we do, we do. If we don't, we don't. I'm not going to chase anything today. Also on UNH in here, I have some trades on a bunch of specs, so I don't really want to fuss too much with spec trades. UNH comes out on the 28th. I don't know if that's enough time, but the IVR is 42. So we could potentially sell naked puts. Yes, this overlaps earnings, but I would be out before earnings. Uh, at 325. Okay, if I did this one, I would take in $355 on a 2264 margin, which is about a 15% trade in 17 days. Now the 325 puts me below the Bollinger Band, so I kind of like this trade. The 330 is probably even better. I can get $450 on 2,500 in margin. This is not a bad trade. Okay, I'm not going to get what I'm asking, but I'm going to give it a shot here. I do like this trade opportunity. So 455. We'll see. I'm not going to chase too much, but let's give you guys the same trade and we'll take a look at this one. So this would be the UNH naked put, which I think is a pretty nice opportunity here. Oops, I got filled. I think it's a good opportunity heading into earnings, which I think will be decent. Don't know. Doesn't matter. I can't predict the future, but UNH. So all I'm doing is playing percentages. So this is a UNH naked put here, and we'll pop that one in. All right. So there's the UNH naked put. If we don't get filled on Oscar, I don't know why we wouldn't get filled, concerning the way it's going right now. We're now up $7, 650, whatever. All right. There were some other trades maybe to take a look at. Did you guys have anything in there? K-Fall, can you talk about the shorter duration 112s like Palantir? I'm used to the 112C. Shorter DTE feels like it needs more monitoring. So when I trade, well, I guess I don't need to talk as much about it because I just put some on. But on this Oscar trade here, okay, when you're doing these shorter term 112s here, I'm really just treating it like like a naked put. So it doesn't require any more monitoring than a naked put. To me, I don't spend a ton of time uh, monitoring these. It's a quick look. Okay, hey, Hood, I got where's which one? Core Weave is not one. What was it? Oh, Palantir. All right, so nothing much to do here. If it goes up, I'm going to close it at, um, I'm going to either close it or stop. I don't manage these. I don't get too worked up about it. It's really the same exact way I would trade any 112 on future. So I'm targeting 50 to 90% of the trap, and I'm stopping at a 2x loss. And that's pretty much it, right? So I'd love to get 90% out of this, which is what I did on AVGO the other day. We took 90% on that one and closed it. We also closed a hood one, I believe, the other day for 90%. So that's all I'm doing on these is if I get filled, great. Okay. I don't think I'm going to get filled at these prices, but who knows? Okay. But if I get filled, that's it. Super simple. I don't have much I have to do on it. All right. So there you go. I think that's, can you look at QQQ for a poor man's covered call? Uh, yeah, I mean, I'm doing it in the Lazy Trader account. We have a QQQ poor man's covered call. But again, I don't know that this is, we've pulled back, but we didn't really get a gigantic pullback uh, on QQQ or SPY. It's a pretty good pullback, but I think if you wanted to start a poor man's covered call, I'd really consider, like, especially for a poor man's covered call, not an income poor man covered call. Income poor man covered call you can kind of put on almost any time you want to. Any pullback is good. And a poor man covered call, you really want to hit the 21 or even the 50-day moving average. And while you're at the 21, you didn't really get to the 50. I would probably look to sell naked puts around the 50, that if we come down and touch it, then I could get into the poor man covered call that way. Um, so that's what I would be looking at. I think these are potential trades out there. I posted a handful for you guys, so hopefully this was helpful. Is there anything last minute you want to touch on before I wrap her up today? Um, and ZB, this is nice. So our naked put here is doing just fine. 40% in 12 days. We'll wait till 50% on that. Core weave continues to improve. So that's doing even better. We're now up 8 on the futures, which is good for our naked puts. We also have this BA112, which we talked about. Okay. But the BA112, here you go. You know, the longer we hang at the beginning of the trap, the more this is going to start to lift. Okay. The more that will lift. So as time goes by, you can see the T+0 line starting to lift, which means you don't actually have to get into the trap to make more than your 550. Okay. If we were looking at this here, like, this is 1,200 bucks. Okay. So in a couple days, this, if we don't move up or down, we just stay here in just a couple more days. Okay. We're looking at like the 30th. So it's like 2 weeks. But in the next couple weeks, even the 24th, next Friday, if the price doesn't move and we stay here, this is going to be worth 971 versus 550. So there you go. I think that's pretty much covers it. Let me get that off of here. All right, couple questions. Buying power versus notional. Okay, can you elaborate a bit on what happens when stock goes down to buying power? Uh, Typically, the stock is not going to affect the buying power. You have a maintenance, margin that you're using, but if the stock's going down, if Vega is increasing or volatility is increasing, it's not going to have a big change. A poor man covered call, one of the great things about that is they're positive Vega trades, which means if volatility increases, you're not, and even though the stock is going down, it's not going to move quite as much. Uh, but if you're worried about margin, obviously when things get more expensive, and you have naked puts, and those naked puts are increasing, it is going to affect uh, your buying power a bit. So it's going to increase your buying power usage because the broker is going to hold more aside to cover that. Uh, but you would have to have again, a pretty good drop and a pretty good vol spike to see it. I don't really get carried away with notional too much, and because we're trading options, I'm not holding the underlying, so I'm not really worried about it. the notional because I'm only trading options. I'm not owning the actual shares. Yes, if I would convert it to shares, it would be a sizable notional problem or issue, but I don't trade stocks and I don't own futures. So notional is not in. Now understand your notional value, okay, and don't over trade. But I think if you keep your buying power in check, you probably that's probably the best way to manage it, because while everybody likes to talk about notional value, uh, unless you're actually owning the underlying, the notional is not really the big thing on it. I think I'm more worried about buying power. And the reason your buying power is twice as high is probably because I have a portfolio margin account and you have a Reg T margin account. So if I would do this same trade on UNH, okay, and I know I'm sharing this. Give me a second. Okay, instead of trading this, if I traded it in like one of my kids' accounts or something, now my buying power is $4,000. Okay, so this is what it would look like to do that same trade here. Okay, I would have a $4,000 buying power in a Reg T account. So if my kids were trading it, okay, this would be what it would look like. Now, I'm still taking in 455 bucks on 4,100 in 17 days. It's still 10% in 17 days. Okay, so it's still a really, really great deal in my opinion. And so even on Reg T, I think you're still okay putting on some of these uh, trades as well. Portfolio margin, you don't want to abuse it because you do want to keep your buying power in check, and you don't want to. I just said don't worry about notional, but I don't want to have so many trades on that I'm size wise. I have a problem. By the way, we're up 12 points now. Uh, you're welcome. But I think you just have to size appropriately when you have portfolio margin, spread things out a bit, uh, and don't get too carried away on things when you do it. But Reg T will keep you pretty well grounded until you can get to that point. All right, hopefully this was helpful. I got to run. My voice probably won't hold up. I can only stay. It's terrible. Um, I've got speech therapy coming up, and I've got doctors shoving stuff down my throat to try to fix this thing. So hopefully we'll get back to these smooth and dulcet tones that I used to have. All right. How many T-bills to buy? Well, I can't tell you how many to buy. Uh, Pankit, if you have a $200,000 PM account, T-bills, I like to keep my T-bills around 10% of my net lick, or 10% of my buying power, I should say. All right, so I'm using uh, 20% of the net lick to buy T-bills with for me. Okay. I don't want to go too crazy. You can go more. Okay. The reason I can't answer your question is A, I'm not a licensed broker and I'm not going to answer your question directly, but B, it really depends on your portfolio. If I was in a portfolio margin account and I traded no futures like the lazy trader account, I could go 80% T-bills. Okay, because I'm not using a lot of cash. But if you're trading a lot of poor man's covered calls, you're using cash when you buy the long calls. Well, you can't use the cash for that and for T-bills at the same time, right? So cash can only get used once. This is why in a futures account, futures use cash. Okay, even if I'm selling naked puts, they use cash. Okay, so it's different if I'm selling naked puts and selling premium in a portfolio margin account. I'm not using much of my cash at all. I can do a ton, 80, 90% T-bills. But if you're buying a lot of poor man's covered calls, the leaps are using cash. Right? So you've got to make sure that you don't run yourself into a portfolio, um, a margin interest situation. So start small. Start with 10% or something, then increase it to 20 and see how your cash looks in your account. And I would definitely, if you're in Tasty Trade, if you don't have your Apex account access, do that as well. So you need to make sure you can also log into your Apex account, which is the clearinghouse. That will tell you exactly how much cash you have. So check your Apex account as well. But what I would do is start small and start adding to it until you get to a point where, okay, I got $1.50 of margin interest last night. I'm too high. Okay, dial it back. Okay, so you kind of just have to feel out how much you can do. But right now, I do a decent amount just to generate some cash. All right, we'll let you guys go. Have a great rest of your day.